Today, we're going to take a look inside a trading demo that really flips the script. It treats trading less like a series of gambles and more like like a process. We're going to see how a structured, disciplined system might just be the real secret sauce. So, let's just start with the big question right out of the gate. What really leads to long-term success in the markets? Is it about hitting that one genius home run trade, or is it something a lot less exciting? Something kind of boring like repeatable discipline? This whole demo is pretty much designed to answer that exact question. Now, before we go any further, it's super important we're on the same page about what this is, and maybe more importantly, what it isn't. This is not a signal service telling you what to buy or sell. Think of it more like a flight simulator for traders. It's a learning environment, a place to observe the mechanics, the rules, and the discipline of a professional process, but without any of the real-world financial risk. And that really gets to the core of it. Just like a pilot uses a simulator to practice handling emergencies, this system is built from the ground up to demonstrate and teach discipline. As you're watching this, I know the temptation is to focus on every single win or loss, but try not to. That's kind of missing the forest for the trees. The real story here is happening in the background. It's all about how the entire group of accounts is managed, how risk is being controlled every step of the way, and how the capital grows, or doesn't, based on a very strict set of rules. To really drive this point home, the demo actually simulates two totally different trading philosophies, two different mindsets. On one side, you've got the prop-funded mindset. The best way to think about this is like you're trading for a professional firm. They give you the capital, but you have to play by their rules. There are strict limits on how much you can lose and clear targets you have to hit. Job number one is protecting the firm's money. Then, on the other side, you have the self-funded mindset. This is more like you're building your own personal account. The goal here isn't some big, single target. It's about steady, gradual growth, all built on consistent execution day in and day out. Okay, so if the whole point is discipline, you gotta have rules, right? So let's dig into the actual mechanics that drive every single decision this system makes. And this gets to the biggest challenge for basically any trader out there. How do you get your emotions out of the way? Fear, greed, hope, all that stuff can completely wreck even the best strategy. So how does a system like this deal with it? Well, it all starts with structured signals. Now, these signals don't just scream buy now or sell now. All they do is provide a directional bias. They answer one simple question. Are we looking for opportunities to go long, go short, or are we staying on the sidelines? This takes away any guesswork or gut feeling about the market. It becomes the first, unemotional step in a totally rigid process. The entire life of any trade here really just boils down to this simple three-step loop. It's rinse and repeat. Step 1, the signal gives the direction. Step 2, the system checks all its rules. Is this account even allowed to trade today? Is it within its risk limits? And only if it gets a green light on everything does it move to step 3, where the trade is then managed automatically, all the way from start to finish. But what happens once a trade is actually on? The system doesn't just open a position and hope for the best. No way. It is actively managing it based on rules that are already set in stone. That means automatically cutting losses if a trade goes south, locking in profits by trailing a stop as a trade moves in the right direction, and constantly adjusting those protection levels. It's all about systematic protection. And this discipline, it's not just for individual trades. It applies to the entire account. Every single day, before anything can happen, each account gets evaluated. Is it active and good to go? Has it passed its goal, meaning its work is done? Or has it been stopped because it hit a risk limit? This daily check-in makes sure that no account can ever go rogue and operate outside its specific rules. All right, so let's zoom out a little. We've talked about individual trades and accounts, but now let's take a look at the big picture, the overall portfolio strategy. So one thing you might notice is that even when there's a clear signal, not all the accounts pile into a trade at the exact same second. And that brings up a really interesting question about professional risk management. Why wouldn't they? The answer is actually pretty simple, but it's incredibly powerful. It's all about distributing your risk across time. By staggering when the accounts enter, the system makes sure it doesn't put all its eggs in one basket at a single price, at a single moment. I mean, think about it. If that one moment turns out to be a terrible entry, you don't want your entire portfolio to get hit at the same time. It's a subtle but really crucial way to smooth things out. So how do you keep track of all this complexity? You do it through meticulous records.
The system pumps out a daily report, which is basically a structured summary of everything that happened. And this isn't just a simple list of wins and losses. It's a tool for objective evaluation. Real pros rely on records just like this to analyze what they're doing right, find what they're doing wrong, and make sure they're actually sticking to their own process. Okay, so as we start to land the plane on this explainer, let's just quickly recap the key things you should be looking for to really get what's going on here.
If there is only one thing you take away from all this, let it be this, and it's a direct quote from the source. The most important takeaway is understanding that successful trading depends on structure and discipline. It's not about finding some magic indicator or a secret strategy. It really is about the framework, the process you build around how you execute.
So as you watch, really try to train your eye on the process, not just the profit. Watch how that daily account evaluation works. Notice when an account gets sidelined because it hit a risk limit. Pay attention to how a live trade is managed automatically. And most of all, watch how the entire portfolio progresses over time, not just one single account. That's where the real story is told. And that really brings us to our final thought here. Looking at an approach this structured kind of forces you to ask a tough question about yourself. When you look at your own trading, do you see a repeatable, disciplined process with clear rules for everything? Or do you just see a series of disconnected bets? The answer to that question might just tell you everything you need to know.